Hello, Face Warriors. Turnaround Tuesday. Fed window. First day of the Fed meeting. How's everyone doing today? Yeah, sir. Will. Take a look. See how our friends are all doing. Susan Taylor. Scott Pickering. See, Face is a place where pros come to intelligence gather. From one of the better teams on the net. Audio is fine. Can everyone hear me except for Forex scale? Give me a Y if you can. Okay, thank you, Will. Nice to meet you, Hammett. Okay, so the feature I see so far this morning is the dollar's pretty weak, right, everyone? My trading warrior brothers and sisters. And to me, it looks like we might be getting a failing rally in silver. Gold still holding up higher on the day, but looks like a little 3 drive here. Okay, so failed at resistance, at least so far. Most likely silver, because it's an industrial and people are talking about slowing growth. Okay. So the way it looks to me is it's very possible this could turn out to be some type of descending triangle from this level. That's going to be the line in the sand. I had it around 1440. So if silver does fail and take out 1440, I think that what Steve has been showing, that will get our breakdown, because 40 to almost 80 takes you back down to 14. So we'll see. That's pretty key area. And really, it's kind of weak performance considering what's happening in the dollar. I really want to see that gold-silver ratio chart. So the S&Ps and the stocks, after making new lows for the move, are trying to stabilize in front of the Fed. So I really had no divergence, or if it was divergence down here, it sure was at deeply oversold levels at 19. So tough call on the S&Ps, very hard to get short down here. Okay, maybe we get back to this breakdown area, 2600 or so. That's going to be pretty key to me. And Aussie, to me, kind of looks still like a bear flag, this off this pole here. But if we start getting back over, say, 7220 or so, maybe it is a bottom. But to me, it almost looks like a short. If the Fed wasn't here tomorrow, I would try it, because it's had the most muted response. Kiwi had a huge response to the weaker dollar, which it's been stronger than the Aussie forever, it seems like lately. I want to acknowledge Steve's great call and the peso. So far we have a failing rally here. And really, this even surprised me, the strength of the NOK. We have this 3 drive here, and momentum is confirming, right? See that? Momentum confirmed. That's a pretty high reading. So despite weak dollar, USD NOK continues to head higher. There was something I saw yesterday, and then I'm going to hand it over to Blake, and it was the lira. Let me see if I could find it. Here we are. And here we are. Okay, and here we are. Okay, so after this happened here, I really didn't think this top would stand forever. So, we've had this pullback, maybe it gets to 5, but I think we're into an area where we could have an ERD again, not Erdogan, an ERD again. So I'm stalking this between here and, say, this moving average 480, because this kind of reading can be a top, but not normally the top. Even have it on the daily. Look at that reading before it came off. So be aware that something might be happening. I know there's talks about President Trump warning erred again about escalating things in Syria, and we've had some issues between each other, and it's a NATO power, so we'll see what happens here. But it might be time to start thinking about another big move to the upside. Also very focused on the yuan, because the yuan, I learned from David Brady, is really a very important peg for gold. So when I was in the Eagle's Nest Saturday, I said, you know what? This looks incomplete in the yuan. And, we've had 2 drives. And I think that there's going to be another push to new highs up here. And if this happens, this should also affect the gold in a negative fashion. So we'll see. Is silver giving us a message that gold isn't going to 1280? We'll have to see. I'm not going to do much in front of the Fed. Yesterday I was, recommended some shorts in the yen, covered early and then turned around and tried to buy it out now. So I'm pretty flat going into the Fed, and intend on staying that way and reacting to the press conference with Powell tomorrow. So that's about it. I think the best thing you can do is prep with your areas in mind and not try and predict what the Fed is going to do. That's a binary bet. It's kind of like roulette to me. And be prepared to react to price action after the announcement, and even more so into the press conference. There's even talk that they may not even raise rates. So I think they will. And I'm not so sure how dovish they're going to sound, but I just want to be flat into a major event like that. Tough enough in between with low liquidity during the holiday market period to trade. I'm not going to do it, and with it being exacerbated by a red event like the Fed. So this is some of the hardest things for me to do, is to wait when I have a good trade going till it gets to objectives, and wait to not be in the market. And like Blake Sprent said, we have to spend a lot of time in front of the screen watching the markets, and wait until there's enough evidence that makes it compelling that you can't not click your mouse and make it worth the risk to trade. So to me, it's not worth the risk to trade going into the Fed tomorrow. We have an excellent guest, Peter Desario. If you haven't heard of him, he's a longtime market veteran, uses all the methodologies to formulate his views on the market. Should be a great interview, so stick around for Peter Desario. And in his handle is Fibbo, so I'm assuming fib work is a big part of what he does. So, okay, all good here. Okay, good, Forex gal. Refer to real rates as 0. Yeah, because the inflation rate is about 2%. So if rates are at 2%, real rates, okay? So real rates really, if they're at 2 1/4, is maybe 1/4. Okay, you got that, Jason? So real rates are rates over the inflation rate.
Inflation rate is actually now has been higher since a long time ago.
Okay,
now
so are we at negative rates?
Yeah, we are slightly at negative, almost at 0, but that also considering the fact that let's assume that you have 10-year treasuries, right?
Right.
Keep in mind, coach, that the income you receive from the yield is taxable.
Yep. Oh,
so, yeah. Right. So if you take that into account as well, yeah, it's 100% still negative.
Oh, and if you take into account the fact that it doesn't
CPI
include education and health and energy and food.
Yeah, the phony. It includes flat screen TVs and laptops and so forth. That
exactly.
Cheaper. Yeah.
If you're hungry,
I don't know. You ever had a laptop sandwich still?
Yeah, I was gonna say if you get hungry, you eat your iPad.
Broke my teeth trying that, buddy. So, Blake, how are you today, buddy? Getting settled in, and I know you're heading off to the East Coast this week, so I think this might be your last day of the week. So make it count, bro. Is he here, or is he leaving?
No, he's here. He's just muted.
Oh,
Blake,
oh,
Blake, you're muted. Okay.
it's
No problem.
okay.
Oh, can you hear me?
Oh, there
Now,
he is.
oh
There
God,
he
I
is.
thought you were already in the air on the way to New York.
Hold on, guys. Hold on.
All right. God, moving, I don't know. I hate it as much as anyone else. It takes a lot out of you. You're disoriented for a while.
I am. I'm trying to figure out my system here, and so
Okay.
I'm a little disoriented, and I was just trying to mess with something, and I unclicked my office, and I'm talking to my office. I'm like, hey, can you guys hear me? They're like, yeah, but we don't want to hear you. I'm like, oh, wrong people. I clicked the wrong button.
Yeah.
So,
I think this break, getting away from everything that you've done over the past few weeks, like could be, you deserve some R&R, you and your wife. So and a lot of alcohol too, at the Christmas party.
this is one of those things, and let me see if I can. I'll take over here.
Okay, buddy.
When you it's the timing of this Christmas party or holiday party. It's not necessarily a Christmas party. We have to say holiday because not everybody's
Kwanzaa.
Yeah, but even in our office, we have actually, I want to say half the guys there are Jewish. So, but we're having our holiday party, but it's right at. I mean, it is really a trying week for me as a person and as a family. It's let me make sure I got the right screen here. Okay, so it's kind of challenging for us because it's just a couple of days before Christmas. We host Christmas dinner. We do that every year. So wow. We get home a couple of days before Christmas, and then it's just balls to the wall, if you will, just getting ready for things. And we've done this 2 years in a row, and it's nice to go to. I don't want to complain about being able to travel to New York, especially being able to go with just my wife and I, and not the kids. But it is challenging. On top of it, we threw in other stuff that this year that's made our life a little bit more challenging for the holidays. But and I'm trying to figure out my new layout here at the office. So I'm trying to figure out everything, and I'm not completely comfortable with what I'm looking at just yet. But let's talk a little bit about the markets now. I have this New Zealand yen short, and it came really within about 15 pips of my position, almost stopped me out overnight. And it could really stop me out here. It has rallied back. It was the New Zealand business confidence numbers came in really strong, and the Aussie New Zealand business confidence numbers came in stronger than expected. I wouldn't say really strong, just stronger than expected. And so we rallied above this 92 cent level, and we're probing towards these highs. I mean, we can obviously make it all the way to 92.50 without much of an issue, and I hope we don't make it all the way up there. I'm just, pointing out that it is entirely possible. I might widen my stops again and just kind of give it some leeway. But the Kiwi continues to be really strong. Now the Euro rallied to 114, and now the market, now the market is talking about the risk of a dovish Fed. We talked about this on the week ahead video. That the Fed might be a little bit more dovish. Now the market's actually, well, at least that's what they're blaming this dollar weakness on today. And you can see that the risk with the euro right now is that we did trade and we had a false breakdown below 113. We did rally back to 114. If you use ForexAnalytix and you read the analysis last night, The euro dollar had a false breakdown of the triangle, which could suggest we move back to the 114 level resistance ahead of the FOMC. Oops, we went as high as 114.02, and we hit it. So that was the risk. Now, question is, what do you do here? I don't know if you necessarily want to be long the euro dollar at this stage in the game. If you weren't overnight, if you were long the euro overnight, you hopefully were taking profits around the 114 level. Because this all happened while I was sleeping. So I think we could dip back down to 113.50, maybe 113.40 ahead of the FOMC. But I would assume at this stage we're going to be range bound, and look something like this, if I had to guess, ahead of the FOMC tomorrow. If I had to just guess what's going to happen. Now, I'm not going to have any exposure to dollars because it's going to be happening as I'm traveling. So I won't even have any exposure, but I would say that a move above the 114.20, 114, 114.40 level, that could risk a pretty big move higher, and we'd start to see a squeeze in the euro. So if you guys are trading the dollar, just be aware of it. Now the cable, we squeezed past this downtrend line, and we stalled at 127, which again, if you read the ForexAnalytix, just basic technical analysis, last night the pound continues to struggle the 126.60 to 127 level resistance, and while below, we have to continue to look lower. We know that this is key resistance. We hit 127.05 as a high overnight, and we've come off. Now, personally, I think the cable can break higher. I'm not long the cable, but I think that the risk is for the pound to continue. Excuse me. I think the risk is for the pound to continue higher. But again, I'm not trading it. You got the Aussie that's just kind of staying stationary, and then look at the Kiwi. The Kiwi, had rallied strongly based on the Aussie New Zealand business confidence numbers that came out last night. We could really be looking at a head and shoulder pattern here if the dollar does turn stronger. I mean, we could let's see here. You can see this shoulder, head, shoulder. It's possible, but you're going to have to see a lot of dollar strength in order for that to happen. I mean, you're going to have to see the euro back below 113 in order for the Kiwi to try to break down like that. The dollar Canadian. The dollar Canadian has been holding up very well. Why? Well, crude is below 50, and crude oil. And let me point this out really quick. Crude oil broke to new lows. Okay. We broke to new lows. We're below 50, and the risk right now to crude is that the crude might bounce and get back above 50. We did have daily sentiment index at 7 overnight, and that is extremely low. So if you look at the DSI, let me just show you. This is last night's DSI here. You'll see that crude oil was at 7. Canadian dollars at 10. So, if crude rallies, the Canadian could actually rally as well. And then you have S&Ps that, you'll look at S&Ps, they're up today. Well, they registered an 8, which is very extreme. Volatility was at 90. That's an extreme as well. So I guess what I'm trying to point out here is if crude rallies and we can rally back above 50, the dollar Canadian, might actually end up putting in a lower high, and then we can challenge, support, which would be channel support, maybe down at 133. I think that excuse me, is a risk if crude decides it wants to bounce. I'm not, you know, with the peso's just been kind of holding above 20, not really doing a whole lot with that. The Swissy is stationary too. The Norwegian krona. Oh, this was our chart of the day yesterday. And guys, if you don't read this every day, because let's say you're not a subscriber of ForexAnalytix, okay, you're not a ForexAnalytix subscriber, but you want to get some of our analysis. You can go to the blog, and typically every day I'm going to put up a chart of the day. Yesterday was the US dollar Norwegian krona, and it basically said that you know, we had a 38% retracement. You can see we had the 38% retracement to right here, okay, and then that should allow us to rally to new highs to the 127% extension, okay, and we hit the 127% extension, and we surpassed it a little bit too. But now that we're up here, you have to be a little careful. I think that relative strength is getting overbought on an intraday basis. If you look at the daily relative strength is divergent as we make new highs. If we stop here, again, I'm talking more about crude. If crude rallies and, you know, the Norwegian krona starts to strengthen, because that is a correlation, a pretty strong correlation to the to crude. If crude bounces, the Norwegian krona may strengthen, and that might push us back below this 863 level. Now that we've, you know, kind of squeezed out all the shorts. I'm not short the US dollar Norwegian krona. I'm just trying to point it out for you guys. All right. I guess you know, one last thing we should look at is the S&P, and then I'm going to turn it over to Steve and Stelios. You'll notice on the S&P we hit the spike lows of 2018. Okay, that is the lower end of the support zone. So we basically hit that low. Look at how divergent relative strength is. Relative strength is actually trending higher on a daily basis as we hit new lows in stocks. That could be one of two things, okay? That could be a warning for bears, which I think it's more of a warning for bears, that we might, you know, get a bounce back above 2,600. But also what could happen if we decided we wanted to get a bearish move from here, you would see relative strength break down like that. That's, you know, like that. So that's possible. But I think right now, I think the risk is that, you know, we're holding the support zone, you know, the spike lows from 2018. We might get a bounce. All right, and might get a, you know, bounce, like I said, back above 2,600. I don't think we're going too far, but, you know, keeping in the theme of seasonal, yeah, Santa Claus rally. We could get a rally, you know, for the next week or so. And today is Turnaround Tuesday, right?
Yeah, and Rudolph's nose is flashing red.
Look, Dale, and I'm sorry, I got to stretch here. My body is like so sore.
You know, it's exactly right. It is a warning for bears.
Yeah, but
that's exactly what it is, just a warning.
Let's just say tomorrow the Fed is a little bit more dovish. What are stocks going to do? What is the dollar going to do? The dollar's going to weaken. Stocks are going to rally. You know, if the Fed's, you know, kind of, you know, backs up the rhetoric, the hawkish rhetoric, I mean, stocks are going to bounce for the next week, and you're going to have a weak dollar. So you'll probably see the euro at 115, and, you know, you'll have dollar yen back at 114, and, you know, euro yen significantly higher. You know, Aussie, Kiwi are stronger. You know, the dollar Canadian would be lower. Those are just the types of things that could happen if we have a fairly dovish Fed, you know, meeting, and if they you know, reduce expectations a little bit. I think that's entirely possible.
Well, the market definitely is front running that assumption.
Yeah, right? Yeah, and they started doing that overnight, you know, and then, like I said, I actually think that is the big risk right now in the markets. As I stated, you know, on the week ahead video over the weekend, but you know, we'll see. I mean, tomorrow's obviously, you know, tomorrow's where it all matters. So, So with that being said, I'm going to pass it over to my colleagues, Steve and Stelios. Good morning, guys.
Good morning, Blake.
How are you guys doing?
Good. How have you been?
Good, good. I'm just wrapping things up here and about ready to head out of town. Just wanted to say, you know, have a Merry Christmas, Happy Holidays. I'm gonna try to broadcast tomorrow morning. I'll let you guys know in the morning. It just depends how much I get prepared today. I might be a little frantic tomorrow morning, so I might make a surprise visit, but you know, I give it about a 50-50 shot.
It's gonna be a blue Christmas without you. That's it, Blake. It'll be a blue
That's all
Christmas.
we get. All right, guys.
I can't get any bluer.
If you stayed a little bit longer, he would sing a little bit more for you. But you know, that's all.
Go make money, man.
All right, guys. Hey, I want to welcome everybody. Happy holidays, and thank you all for tuning in and supporting us here at ForexAnalytix. So we appreciate each and every one of you guys. So thank you very much.
All right, buddy.
See you later, Blake.
All right, guys. Have a great one.
Hello, Steve's plural. Good afternoon to you. So what do you think, Steve? You know, what I really want to see is, you know, what's been happening lately, how that gold silver ratio chart looks. But
Absolutely.
you could start wherever you want. You know, because of silver's action, huh?
Yeah. Before we start with that, I could show you where copper is at the moment.
Yeah, on the verge.
Yeah, it's on the verge. It's on the verge. It's testing the waters here. So this is something if you remember, we mentioned it several days ago. I'm monitoring it closely. You know, a rebound here from stocks. Blake already mentioned that we are at, you know, quite a critical stage. I mean, you know, moment of truth is here. We're now testing the 2018 lows. In the S&P, which is the benchmark for risk, this is a support zone from many aspects. And yesterday we tested, you know, to the pip that actual low, and we pared back some of the losses to close right at this, you know, horizontal support area. If we actually breach that, I think that the next downside target is at 24.75, and that opens quite a lot more of the downside. Now, obviously, if we get a rebound from here, which in expectation of a more dovish Fed, I think that there is a chance that we're going to see a rebound, mostly because let's assume you are one of the people that were short, right? Wouldn't you be booking some of it here, right?
Yeah.
I mean, wouldn't it make sense ahead of the Fed, you know, to book some? Or isn't it a good risk-reward opportunity to be long some here and, you know, take a small risk, like, you know, put a stop loss, you know, below yesterday's lows and, you know, have a decent risk-reward ratio? It is. So it wouldn't surprise me to see a recovery in risk appetite ahead of the Fed, which, as I was saying yesterday, it should find some follow-through if the Fed hikes but has a very dovish language, or even if the Fed doesn't hike. In this case, we might see an initial knee-jerk reaction, like, you know, quite a big reaction higher. Now, do I believe that in any given case the rally is going to be sustainable? Personally, I'm doubtful. I'm still forced to respect the longer-term uptrend. There is no question about it. But we're getting very, very close of triggering major technical events. So, you know, I think that the chances are now 50-50 that we've seen some tradable high. I'm still in sell the rally mode, but definitely, you know,
not down
ahead
here.
Yeah, and not ahead of the Fed tomorrow. Absolutely.
Yeah, you know, Steve. You know, a lot of the people I interview, and a lot of people that, you know, I'm a big believer in intelligence gathering. ForexAnalytix is my major source, but, you know, I have other sources, and some people say that if this doesn't hold this level here, there's another 5% to the downside, and this is a pretty long-term bull. saying this. So under this level, 5% is what, another 125 handles from here. So that's what they're looking for if we fail.
Keep in mind, by the way, that you remember we talked about it yesterday as well. Another horrible day for the Russell. The Russell is coming now close, though. If you remember that I had mentioned this level, this is a triple confluence of supports down here. Why? Because as you see here, this horizontal area has acted as support multiple times in the past. Plus, this is the 127% extension of this leg higher. Plus, this is the 50% fib of this leg higher, right? That was
the whole
up
move.
to a point. Yeah. So, you know, a very, very, very critical level down here at 133, 50, 60, 70, somewhere between there. You know, I wouldn't be surprised to see Russell rebound ahead of that. As Blake mentioned, the vast majority of the indices do show some divergence. Yes, for sure. So, and keep in mind, what is the adage? It says that bull markets are climbing a wall of worry and falling a slope of hope, right?
Yeah,
so
good one.
That means that, you know, that even if this proves to be a bear market, because, you know, a bear market typically is a bear market after you've had a correction that's at least 20%. But, you know, until you get to that 20%, it's still a bear market, but you don't know it yet, right? It will prove later that it's a bear market, but you can't know it in advance. I mean, it starts as a correction. Every bear market has started as a correction, right?
Every bull market.
Yeah,
all of them. You know,
obviously.
That's you know, the definitions just by, you know, by its nature happens in a rear view mirror. I mean, you don't know till you look back and it's completed it.
Exactly. So one thing is for sure, even if that proves to be a bear market, that does not mean that we're not going to have some rallies. And usually, or frequently, as you very well know, rallies in bear markets or corrections in bull markets can be quite vicious, right?
Yes.
Why is that the case? Because especially when it's a mature bull or bear market, or in any case, you might have like extreme sentiment or positioning, which makes corrections look very sharp and very impulsive in nature. So, you know, this is something that we have to keep an eye on. Now, as we said, obviously ahead of tomorrow, you know, I wouldn't advise anybody to be short unless you already have the position and you want to manage it, which is a totally different case. I'm not saying that if you're short, you should abandon your short position because you never know what happens tomorrow. But I'm just saying that you should be careful to make sure that you don't give back to the market, you know, your gains. So now let's go back to your initial question, which had to do with gold, silver. Yes, Telio?
Can I just interrupt for 1 second? I didn't want to interrupt before because it's not going to really make a huge difference in the markets, but we had some building permits and housing starts numbers, which were quite a bit better than expected. But ahead of the Fed tomorrow, it's a bit irrelevant.
Yeah, the market is not going to react to them ahead of the Fed. US building permits actually 5% versus previously minus 0.4. Yeah, so that's quite a big jump. But as you very well said, Stelio, I think that no matter what data we got today, nobody would risk jumping on the market just because of some, you know, monthly data ahead of the Fed, right? So I doubt it that, you know, anything we get today is going to influence anybody's decision in jumping in the market here. Now, having to do with the gold-silver ratio, coach, that you asked before, gold-silver ratio might have had a high here. We said that that major outside black candle was obviously a signal that lower prices were coming. But as you see, so far, we haven't had any big acceleration to the downside. So far, also, the index respects this descending trend line, as you see in the RSI. So I'm monitoring the RSI here as well. Now, having to do with gold, gold did find support. As we said yesterday, I said that, you know, gold would still have a positive outlook in the short term since it's holding this previous high. but I still believe that even if we jump higher from here, it's still all part of a corrective move higher. So I wouldn't be surprised if we see a further appreciation towards these confluence of resistances roughly at 1260, or even a little bit higher to retest this broken trend line support as resistance, which currently comes at roughly 1275. But so far, this move higher looks corrective to me. Now, having to do with silver, nothing has changed here in the sense that only daily close above 1480, 1485 is going to constitute a technical development worth mentioning, because in that case we're going to be triggering a rectangle formation. You can even see it as a triple bottom formation in this case, in which case you should expect, by theory, you should expect an extension equal to the height of this formation. The height of this formation is roughly $1, so you should expect this move to produce upside equal to the height. So let's say roughly a move towards the 61.8, which comes a little bit lower than $16. That covers the metals. And now having to do with crude, let me go down to a 4-hour chart in crude, because I said yesterday, if you remember, Coach, that crude looks like a triangle that wants to break lower. That's exactly the case. That's exactly the case. You can see it here, a market that refuses to move higher and is coiling after such a big bearish downside. There is only one interpretation, that this is a continuation formation. But as I've said multiple times, I've already made several attempts of buying crude, and I've managed to get out of the market almost unscathed. And I will keep trying to buy it, because I do believe that this move should create some kind of a big reaction. The market is positioned now very, very bearishly, and I do believe that this is likely the last leg lower that we're going to be seeing. Ideally, since we broke that, we've currently tested the 127% extension, but ideally, I would want to see this market make it down here. No, that's not what I want to do. Yeah, this one. Why? Because between 45.50 and 46.20, we find a 161.8% extension of this triangles range, and we also find the 61.8% fib of the whole move higher from the 25 low to the recent highs. Given also the extreme oversold nature of the market, I'm not saying that the market can't find a low here, because theoretically speaking, we've now fulfilled, the minimum criteria of one more low, since this was obviously a continuation formation. But ideally, I would even want to like to see it anywhere between 45.50 and 46.20. And then I would expect a bigger correction higher. But let me reiterate here, after seeing the move that we saw to the downside, I would treat any move higher as a corrective move. Of course, a move that takes in such a short period of time crude up from almost $80 down to less than $50 can end up being a move that might be like $10, $15 of upside, right? And it might take a long time to unfold, because one of the characteristics of impulsive moves is that they're sharp and they happen quickly, while oppositely, corrective moves are slow and they usually unfold in an overlapping manner, right? So we might have made this move in X amount of time, and then we might take, double the time to correct higher, just like $10 or whatever. But that doesn't mean that there isn't going to be an opportunity to make money to the upside. I actually think that the next big move in crude is higher and not lower. Now, is it going to come from here? Is it going to come from a little bit lower? I guess we will find out rather soon. Perhaps, as Blake said, a dovish Fed tomorrow should weaken the dollar, should momentarily, not momentarily, but in the short term, raise expectations that the economy might perform somewhat better if the market participants start believing that the Fed is willing to support the economy by easing or anyhow staying, because you can't actually speak about easing, because we've had this conversation before. The real rates are still negative, real rates being at zero or slightly negative is anyhow a very loose, very easy monetary policy. So nobody can be talking about a hawkish policy simply because in any kind of environment other than the one we have today, the current monetary policy around the globe would have been considered extremely stimulative. But unfortunately, it's like heroin. The more you get, the more resilience your body develops, and the more you need to get a high. And that's the problem. So that's why in the previous financial crisis, lowering rates down to 1-2% was more than enough to stimulate the economy and create the next bubble. In this case, now we've gone to the point that 2% rates are considered too much to be sustainable. Who knows during the next recession, what is going to start being considered as normal, stimulative rates, and what kind of policies we're going to be seeing. We know as a fact that the Fed was already considering at the time they were doing QE3, they were preparing to see what they're going to do if that was not enough to help the economy. Because I remind you, given the situation we had with the Eurozone at 2011, 2012, there was big speculation, and there were real tangible data that there was a chance that the global economy would go back in a recession, which was quite shortly after the previous one, given the average business cycle. So the Fed actually gave us QE3, and at the same time, we know that because they've officially released it, they were considering and talking about other measures that they could take to stimulate the economy if that didn't prove to be enough. One of them was helicopter money, so they were already working on the theory of that. So we already know that they have some tools in place for the next time that the economy goes in trouble. Definitely QE is something they're going to utilize once again. Definitely cutting rates this time to negative is something they're going to utilize. In my opinion, we're probably going to see, because they weren't exploring the possibility for fun, we're also going to see what is said on the street, like helicopter money. Helicopter money is more or less the opposite of QE, because they realized that QE has the problem of creating asset bubbles. So then the alternative theory was, okay, why don't, instead of trying trickle down economics, meaning giving the money at the top of the pyramid and hoping that that's going to trickle down, why don't we do it from the bottom up? Meaning, for example, give some big tax cuts to lower paid people, or outright like credit their bank accounts with X amount of money. So trying to stimulate the economy, from the bottom up. So more or less of a socialist policy, or universal basic income, for example. All of those methods, would be considered, and especially if we go if we see the economy go into a recession, you can more or less consider it a given that Trump is going to end up being a one-termer, because that's what usually happens. I mean, the most important factor for a president being elected, re-elected, is how well the economy is doing. So, irrespective of if you like Trump, you dislike him, you like his policies, you don't like his policies, or whatever, statistically speaking, if the economy has gone in a recession before the previous election in 2020, the chances that he's going to be re-elected are very low, which means that a Democrat is going to be elected. If we do have, a Democrat president during the next cycle, especially, policies like that, like, helicopter money, universal basic income, I more or less consider them a given that they're going to happen, because they're, quite popular with, the way that, the Democrat Party is thinking and considering of the economy. Personally, I believe that, all these policies that both Republicans and Democrats have been utilizing during the past several years, and the vast majority of the developed economies, because there's no point in focusing only in the US. More or less, the vast majority of the major economies are doing the same things, are distorting, a healthy market environment, and they're creating a lot more problems than they're solving, and that's why we're going from one financial crisis to the next, and that's why the boom and bust cycle has become so much more severe. In the past, we had, the boom part of the cycle, which was usually much, less extreme, and then the recession was much more tolerable. Now we have the opposite. We have like big boom parts of the cycle, and then big busts, and then we're trying to alleviate the pain of the bust cycles by doing the same thing that created the problem before, so on and so forth. Stelio, by the way, before I go to more charts, CAD yen, thank you for reminding me that. What do we have from macro?
Actually, ahead of the Fed, not much. There was one interesting development from the UK where Jacob Rees-Mogg, who was one of the Conservative Party's leading Brexiteers, that's how people call him, he made a spectacular U-turn and announced his full support of Theresa May yesterday. So that was very interesting. We have to factor in, though, before we get too excited about it, we have to factor in that Theresa May has said that she's not going to stand again for elections. So maybe he's just positioning himself to, to lead the Tories next time round in the next elections. I don't know, but this was, this wasn't reported too much, and really the pound hasn't done anything on the back of it. But it's interesting because another, very high-profile politician just made a huge U-turn and did that. So that's really the only thing that happened.
If you remember, I predicted that not because I'm some kind of a magician or whatever, because it makes sense. Why would anybody want to get himself or herself in the shoes of Theresa May? I mean, no matter what she does, the vast majority of people are not going to be happy. So it doesn't surprise me. I think they're going to go on with Theresa May simply because nobody wants to take such a huge risk in destroying their political careers. So, it doesn't surprise me.
That's a good point. And, let her do the dirty work. And then when she's out, then...
Exactly. And when that is done and Brexit is a given, then somebody, anybody else can say, oh, yeah, we got what we got. Now let's see what we can do. And then they can, they can try to claim the position, having that issue out of the agenda. And it's much better having to handle something that you didn't create than being responsible for creating a situation, because then, you're always going to be the one to blame, right? And as I said, I think that there is no, there are some puzzles that are unsolvable. I don't think that there is a solution to the Brexit problem that is going to make the majority of citizens and voters happy. So no matter what Theresa May does, I don't think that she will ever be remembered as like the great politician that solved this issue. There will always be complaints.
And actually, Scott is commenting that it has to do with the Corbyn no confidence in May government. Basically, Labour yesterday, they said that they're going to, there's talk that they're going to, they want to lead to a vote of no confidence, but not to the government, to Theresa May, right? So I think from what I read, this thing will not lead to elections. If it does happen, and if May indeed loses the vote of confidence, not from her own party, this is from the Labour side. So from what I read, it's not on the government, it's on Theresa May. So it will not lead to elections. But I have to read up a little bit more on this just to be 100% sure. It's the whole UK politics theater is just a mess. I just anyway,
it is really a riddle that, as I said, I don't think it has the perfect solution. So, but it's like a band-aid. I think one way or another, they should get done with it. So the next day can begin from somewhere, because uncertainty is like dying a death of 1,000 cats, right?
Cats as in dogs and cats, or cuts?
No, cats as with you. So we have a friend here asking about CAD yen. You know something? That's what I was seeing in CAD yen, and that's what I'm still seeing. I saw here. If I zoom out, you can see how much clearer it is. I saw here a corrective move higher, perfectly channeled, right? And we did break lower. We found support at the 61.8. We did rebound, but look where we got rejected. At the confluence of the 200 DMA and the retest of the broken channel support as resistance. So personally speaking, from this chart, I see nothing bullish at the moment. Of course, we're currently testing support once again, the 61.8. So, would I be, if you sold here, fine. Now, would you be selling here? Probably no. But, I still see lower prices coming from here. And what other currency pair, and it's one of those I wanted to remember to mention today, did the exact same thing, which was what we talked about here several days ago, the Aussie Kiwi. If you remember, we talked with Greg about it as well. The Aussie Kiwi rebounded, came back, retested. If I zoom out, you can see how critical, how important this trend line is, right? This is the trend line, the broken trend line support of a symmetrical triangle that dates back to 2013. So once we broke below it, it's no surprise that the market pulled back, retested this channel, and after doing so, it seems to be collapsing. Like today, we had an inside day, a very, very usual sign of hesitation, indecision, but you need to know how to interpret those things. So you see, for example, a shooting star, an inside day shooting star. After, you need to combine candlestick formations are signals, are short-term signals, because, even the most complicated candlestick formation is like 5 candles long. So, even if you look at the daily chart, the most complicated candlestick formation might maximum take five days to unfold, right? The vast majority of them, though, are either 1 day, 2 day, or 3 day candlestick formations. So very short-term signals. We cover them in ForexAnalytix because it is imperative. And this is what we're going to be talking about in the New York Traders Expo, because we have a presentation in the New York Traders Expo in March. By the way, you're all invited to join us. It's going to be 10th, 11th, and 12th of March, obviously in New York, as you understand, in the Midtown Hilton Hotel there. So we're going to have a presentation, and the topic is going to be about trading, with confluences. So why do we use as one of the 5 types of candlestick analysis of the analysis we cover, the markets candlestick analysis? Simply because candlestick analysis on its own is not enough to give you a trend, right, or a trend reversal. But it's a very good leading indicator that when aligned with more patterns, it's a very powerful one. So, for example, when you see like a big candlestick reversal at a very important technical level, because let's assume that same level is, for example, as in this case, like a broken trend line that we're now retesting, or an important fib level, or it also completes, let's say, a harmonic pattern, or you can count like the candlestick coming at a place where you would count from an Elliott wave perspective that this is the end of a corrective move or whatever. It gives you the trigger point. It gives you the proper risk-reward opportunity in the short term to time a reversal that would otherwise be harder to time, so soon. So candlesticks are a very, very good leading signal that something might be changing, because the vast majority of the candlesticks are reversal patterns, right? That's why you need to take them with a pinch of salt and only consider them as credible when they agree with more things you can see on a chart. So in this case, that was not like a very powerful reversal. It was just an inside day, but still an inside day shows indecision. Given the fact where we were, the fact that we've turned lower, it doesn't really surprise me. So I do think that there is more downside to come. Now, could I exclude the probability that we're going to have some consolidation here, so we might not break down from here? We might get like a triangle or another attempt to rebound a little bit higher, since this has already been a very deep correction. If we assume that this is just a B in an ABC, we've already retraced a big part of it. So even if we push higher once again, that new high is going to be barely higher than the previous high. That's what I would expect. So in any case, I would expect the Aussie Kiwi to resume to the downside. And speaking of which, let's have a look at a few more charts. Aussie yen, as you see, not a pretty chart to be looking at, but other than this false break higher, it has been playing ball with this descending channel, and it looks quite heavy at the moment. So I haven't shown it in a big in a long period of time, so I want to show that. Kiwi yen did exactly what we expected after this triangle. I expected one more thrust higher and then a pullback. So far we've seen that thrust higher. We've seen a full pullback, but let me be very honest here. At least the Kiwi yen that looks more clean, and despite having hit the quadruple bottom target, which was here at 78.50, the move lower so far looks corrective in nature to me. So
ABC.
It looks like one at the moment, Coach. Yeah. It does look like one at the moment, right?
Yeah, so, and when you think about Aussie yen, even though it looks worse compared to what equities have done and a measure of risk on, Aussie yen used to be a classic one. It's not even close to the lows compared to what the S&P has done, So there's another warning sign for bears, sure.
Yeah, Kiwi yen for sure. And this troubles me a little bit I mean, first of all, it doesn't trouble me at all having to do with the Aussie Kiwi interpretation, because no matter which pair you look at, Kiwi looks much, much healthier than the Aussie at the moment. So, I like to see more Aussie Kiwi weakness no matter what. So it aligns with that. But yes, this also points to the possibility of some risk on sentiment, perhaps in the days to follow. Perhaps we need to see one more high here. We're gonna soon find out. Now, having to do with the popular pairs, I just wanted to say two things. First of all, today the cable is testing this broken triangle support as resistance. It actually did so a little bit earlier, and it has pulled back slightly. Now, could this new low have been it? Yes, it can. Theoretically speaking, I expected that this triangle is going to be resolved to the downside. We have produced a new low. Would I have preferred to see a lower low than the one we saw? Yeah, I would. But unless we break above this trend line that we're now testing, regardless, you should keep respecting the downside. Now, having to do with Euro USD still coiling within this symmetrical triangle. We had to readjust the line since this was obviously a false break. And it's more than obvious that we shouldn't see a breakout until the Fed tomorrow. But I very, very, very much doubt it that after the Fed, this is going to stay in a triangle. So one way or another, I believe that by tomorrow night, we're going to have a resolution to this, coil, either to the upside or to the downside. As you see, RSI has also, in essence, been oscillating around 50. This shows that this is a market that's ready to, a market that has had contracting volatility for quite a long period of time, and it's probably ready to do the exact opposite thing now. I think that volatility should increase starting tomorrow. Still looks like our yen is a triangle support on the weekly. Good risk reward for a long. Dave, as I told you, mate, you might be right, but so far I'm seeing a corrective move higher after a big formation breaking the downside. So as long as that's the case, I would rather be in the short side than the long side. Although I have no exposure at the moment because I think there are better opportunities out there. Now, let me see if we have any more questions that I haven't already covered. Hi, great work, and thanks for your help. There are 4 buy of call options at 1:15 on the 20th of December at very liquid days. This could pull the market higher this week, and maybe we get a flash next week. Yeah, Costa, that might actually happen. That might actually happen very easily. I mean, in my opinion, it's anybody's bet what's going to happen from here, because the chances of a dovish Fed tomorrow are quite substantial. You can see how much you can see how much Trump has been trying to influence that as well. So, Coach, is your guest here?
Yes, buddy. Yes,
Okay.
Peter Desario is in the house.
Perfect. So enjoy the interview and, see you later.
Okay, buddy. Great review, Steve. Hello, Peter. I'm going to make you the presenter now. Really looking forward to meeting you and speaking with you. You'll see a drop-down menu here for you to share your screen and activate your mic. Wow, look at that. Oh, nice Harley, buddy.
Yeah,
Beautiful.
that's mine.
Yeah?
Yeah.
Easy rider. Huh? Easy rider.
I don't know how easy it is, but I'm a rider.
All right. Well, thank you so much, Peter, for coming in today and being willing to, share your journey and your work. And it's really nice to meet you. So looking at your setup, looks like you use a lot of wave counts. And I'm interested in, I think your Twitter says you've been trading for about, 18 years?
18 years? No, more like 48 years.
Oh, like me. Oh, okay. So
Been around a long time.
All right. So you kind of broke into the business when I did in the 70s, right?
Yes, I did.
Okay. All right. So what was your entree into trading and the business?
I originally went to Kent State University out in Ohio and got an MBA. I had a big, strong background in economics. I took every econ course that Kent State offered. I could have got a doctorate, but I didn't want to do any more coursework, and I was anxious to get out in the world. So I took a job as a bank credit analyst for Central National Bank in Cleveland.
Mm-hmm.
I worked there for about 1.5 years, and one day a guy comes into the bank and he wants to get a loan to rebuild his burned down grain elevator. And
interesting.
Guy got interested, and he had big plans for ultimately getting a terminal elevator going on Lake Erie. And long story short, he talked me into going into business with him. As I was a kid, I remember my dad always talking to me about every time we'd go by some large business. So, this guy, I used to know him. He wanted me to go in business with him, but I didn't do it. And this guy, mostly in construction company. My dad was in construction.
Uh-huh.
And I said, well, if I ever get a chance, I'm going to jump on it. Well, unfortunately, or fortunately, I don't know, I jumped on it.
Yeah, you said I'm going to fade my father because look at what he could have had. And
yes,
so
exactly.
that was definitely your paradigm. So you went ahead, and what happened?
And I got in the grain business and quickly got interested in the futures markets, because we owned a grain elevator, and when you own a grain elevator, you have to use the futures markets.
You have to hedge.
You have to hedge. And just by coincidence, a guy called me who was trying to get my hedging business, and he asked me what was going on. I said, well, we got a country grain elevator, and we have farmers that trade kind of through us a little bit too as well. And I occasionally offer them advice because I'm a little bit interested in the markets. And he said, well, we're starting to expand outside of Illinois, and we're thinking about opening some branch offices, and we'd like to maybe have you be a branch office worker. Well, this was Howard Stotler that was talking to me at the time.
All right.
And so I started an office for Stotler and Company. They ultimately became the largest pure futures company in the country.
Yeah.
I was most into their technical analyst, and kind of was more of an analyst. And so obviously I was a lot more interested in that than I was the grain business. And so I kind of moved off premises with that and opened a pure futures brokerage office. I was a manager. I hired 5 or 6 other guys, and we did out in northern Ohio and old kind of territory of Waldock. If you remember Jack Waldock.
Sure, Lynn Waldock.
He was up in Sandusky, and I was in Fremont, not just down the road.
Okay.
And anyway, so I was
taking me back. I feel young right now.
Yep. Okay. Well, so anyway, that was my entree into the business, and
were you with Stotler to the end?
Unfortunately, I guess fortunately, I wasn't with Stotler to the end.
Okay.
The guy that was their undoing, I couldn't get along with.
Okay.
As a matter of fact. And so I had left Stotler, and let's see, I had an office. I moved to Akron, Ohio, and I lived, which is where I was born, and I had an office in Akron, Ohio. And while I was there, you know, it was one brutal winter in 1985. I'm changing my flat tire because it's so cold, the tires get brittle, and you hit one of those many chuck holes, and you get a flat tire. For the second day in a row at 20 below zero wind chill.
Grew up in Chicago. I know what you mean.
Yes, and I'm saying to myself, you know, just because you're born here, you don't have to live here. And lo and behold, the very next day, a good friend of mine who lived in Atlanta said, I have a job interview with E.F. Hutton down in Stuart, Florida. Are you interested in going with me? And I said, you better believe I am. I drove the next day down to Atlanta. I flew down to Atlanta the next day, and we drove down to Florida. And by July, I was working in Florida, and I've been here ever since.
Oh, great story. You know, I only bring up the Stotler story and their failure to edify anyone who's listening to us, because really that was handled so much smoothly because they were a clearing member.
Yes.
So they were guaranteed by the exchange. So customers were made whole, and the transition to other brokerage firms, clearing member firms, was fairly smooth. So, you know, if you have a futures account, it's much better if you're going directly to the clearing member firm rather than a non-clearing FCM, or because you have the security of the exchange behind you. So, I mean, the difference between how Stotler was handled and then a firm where there was fraud like PFG is night and day, and they were a non-guaranteed, they were a non-clearing FCM. So, you know, make sure wherever you're trading, warriors, that you do your due diligence about regulation and the return of capital, not just the return on capital. So glad you brought that up, Peter. So let's talk about your trading now. So, you know, I see where you're at now and what you use. How about the evolution of your technical analysis background?
When I first got interested in the markets, I said, well, this ought to be easy. I'm just trying to find a price here. And I've got a degree in economics, and I know that price is caused by supply and demand. Right. So all I need to do is figure out the supply and figure out the demand, and I can figure out the price.
Right.
So I was absolutely a pure fundamentalist back when I was in the grain business. I go back to 1971. That was a year when there was a corn blight scare, because we'd had corn blight the year before. And I had gotten all the information from the USDA. I was following the development of the disease. I knew where all the N-cytoplasm or blight-resistant seed was planted. I knew which way the winds were blowing. I knew that there was no way that we were going to have blight damage, and we were probably going to have a bumper crop of corn. So, genius that I was, I took every dime that I had and went short corn.
Right. Okay.
And because I knew that we were going to have a bumper crop of corn, and I knew that corn was going to probably be driven down to the loan price, which in those days, believe it or not, was I think $1.06. So here was corn.
Yeah, you know, Jack Schwager brought that up. You know, I posed the question of, you know, being a technician or being a fundamentalist, and his reason for preferring technical analysis is, as a fundamentalist, despite what price is doing, the case may still be there. Okay, so if the case is still there for the fundamentalists, but technically it's a different trend, it's easier to blow out with a fundamental opinion than a technical background.
Absolutely. And I remember the day, July 17th, 1971. In spite of everything that I knew, this guy that was a plant pathologist for the University of Illinois, Malcolm Shirtleaf was his name. He walks out in the field in Illinois and he says, yep, sure enough, we got blight here.
Mm-hmm.
At that the front page of the Chicago Tribune, and corn opens limit up and wipes me out.
Yeah. Okay.
And I'm wiped out and lost more money than I ever thought I could lose, and low down. And then of course what happened was after that day,
yeah, it failed.
The high.
Yeah. Okay. All right. Now you know what? This is great.
Till December.
Okay, this is great. So
that was when I knew I had to find another way.
Okay.
And I got into cycles.
Okay.
And that was my big thing. I read Hirsch's book, that The Mysterious Forces That Trigger Events, and I got into cycles and I became an expert at that. That was what appealed to Stotler about me, because I remember I did some seminars in November of '75. I said next April 27th, the soybean market's going to bottom on April 20th. And I did this in November, and I put it in a sealed envelope and whatever, just to prove that cycles work. And lo and behold, next April 27th, we had a major bottom on the day.
Peter, can I ask you a question?
Sure.
Because many people have, I've blown up accounts. I think a lot of people have gone through that experience. What I'm interested in is, after something like that, and then salt in the wound, that it turned out to be the high. How did you emotionally and psychologically recover from it? Did it take some time? Did you have to stop trading for a while? How did you handle it? Because
yes, I did.
Go ahead.
Okay, yes, I did, but it wasn't terribly long after that. It was 1972. I was trading plywood. And I was a friend of a guy that was in the plywood pit, and I thought he had all the answers. And I got onto a trade there that I thought was really going to make me rich. And I dropped like 30 grand in one day. These are the days I was making like 30 grand a year.
Yeah.
And I dropped $30,000 in one day. And I'll never forget. I come home and I see my wife is sitting at the dining room table cutting out coupons to save 15 cents on a pound of wieners.
Right.
And I never did tell her about that. But I somehow recovered from that. I started trading small again. As with Stotler, I was able to trade without margin, and so I kept coming back, and 18 months later, I blew up again when I got into the worst trade in the history of commodities: short pork bellies and long hogs, which was an idea from the guy that ultimately was the one that blew up Stotler. But anyway,
my God, well, you've been through
oh yeah, I left out Feb '74 when I shorted one contract of silver and got killed.
Okay, so let me ask you this.
So
what turned it around?
Okay,
what turned it around?
I got suicidal. I mean, when one of those times, I remember taking my car, measuring out, and figured out how hard I had to hit this abutment to make it look like an accident, so my family would get the life insurance. That's how despondent I was.
Okay.
And I was going to kill myself. But somehow I didn't, and I recovered. But I kept blowing up like every 18 months for like 3 or 4 or 5 years. And fortunately, I was able to make a living because I was in the brokerage business, and because I was an analyst. And I always was better at figuring out the market than I was trading it. And that is the case to this day. I mean, one of my biggest clients said to me, "You just analyze the markets. I'll do the trading and I'll take care of you. Don't worry about it." And so I've always had a tendency to be much more of an analyst than I am a trader, and I'm a lousy trader to this day. And I mean, now I'll put, when I think something's big is happening, I'll put something on small and forget about it. That type of trading is about the only kind of thing that I do these days.
Well, I'm so blown away by the transparency and authenticity of your story. I mean, a lot of people would have a hard time saying that, and that you're still in the game, and and that you discovered that you're a better analyst and trader. I can relate. And many times I'm much better at calling the market. My shortcoming is always, not riding to targets. And, the blowups happened when I was stubborn and
Yes.
averaging out and all of that. And what a great story. So you know what? You don't have to trade for us either, but I'm interested in your analysis. And you know, we're looking at the dollar chart, and Friday we took out the previous high, looked like a stop hunt instead of a breakout, and now it looks like we're challenging that uptrend line. You think the high for now may be in, or could there be one more push before we head down?
Well, that's exactly the question, and I don't know. I know that we stopped, so we made a new high there by 1 tick in that cash dollar index.
Yeah, they picked.
And
I had two. I had two. Yeah.
Okay, it was 1, 2, 3, 6 expansion, which is a classic B wave. However, B waves are usually spikes, and this isn't a spike, and they usually reverse, and you know it. And so I'm suspicious of this. And if you look at this possibility, what I have here, this alternative idea here, this is another way this could happen. This triangle could have been, we could have had, there's your 3 waves down A, and it's not unusual. It's actually more common to see a B wave be about 1,382 times A, which is up here. 97, 70, let me see, what is that, 98? My eyes are not.
Yeah, around 99, around 99.
98, well, 9820 is 1382. 99 is 1618.
All right, got it.
Yeah.
All right.
So anyway, so what we might have here is an initial zigzag, a triangle X, and then this might have just been like A of one more zigzag, kind of a little wedge A. Do this as long as we hold this low on this pullback, and then have one more leg up, and then that will be your B. And then if you get a reversal, then you look out.
Yeah.
But
yeah, I see the possibility for both as well. So, you know, right now a lot of people are trying to get front run the Fed a little bit, thinking, you know, they're going to raise rates or not raise rates, and even if they do, they'll be dovish because of what's happening in equities. So a lot of people are shorting the dollar here. You know, we'll see if they're right. I don't know.
I know you,
what you tell your. Go ahead.
Yes, go ahead. Well, I mean, you guys, I know that you guys are traders and you're short-term oriented, but I always start with everything with the big picture.
And is that the daily, the weekly, or the monthly for you?
Does this answer your question?
Sure it does. I knew this would be a great interview. All right. Okay.
So here's my big picture on the dollar. It's in a major bear market.
Right.
When we went down in a corrective fashion, we went up in a corrective fashion, we went down again, and then when this, I called this high almost to the tick because I was looking for the most classic fourth wave in an ending diagonal, which is 786 of the second wave. And so I have a 3-wave rally, an A, B, and a 1, 2, 3, 4, 5, C, and I get a reversal, and I say, hey boys, I mean, this could be headed way down here, but it's not going to go there in a straight line. And so my long-term idea is that the dollar actually is in a bear market, and it started way back here, but it's down to a nominally new low. So with that, then I look, here's your first 5 waves down. Here's where we're looking for a worthwhile correction. Now this thing I thought this was 5 to here.
Right.
So we know that an initial 5 waves is never the end of a move. So I'm thinking, well, we need a down and an up, but it didn't, come down as much as a B wave normally would. You're going to retrace that for more.
Would have been, 92 neighborhood.
Yeah. So instead, we just got this little, and I said, okay, it's probably A of an expanded flat. And so now I'm looking for that B. So that's what brings all this about.
Okay.
And, anyway, so that.
All right, great. I really thank you for sharing both, your short-term potential scenarios and long-term. That was a beautiful chart of the dollar. I see you have. I don't know what you have. Do you have a view on? Is the S&P? Is this a 4? Even if we still flush a correction where we still haven't completed the bull market, and even though this is so painful, it could be corrected.
Yeah, let me get over here to this is the page I hang out on all day, but I think yesterday was significant with that. I know you showed earlier that we had virtually a double bottom with the Feb low and the cash S&P. but it did take out that Feb low, and I think if there was a bullish case to be made, it probably required holding that Feb low.
Okay.
And the fact that we didn't probably means that we're not going to see a new high in the S&P. However, you know, we didn't make a new low in the Dow. Or the March low, I should say. From its third wave low, we had 3 waves down. We had an A, a flat B, and a wedge C. And then this is what has driven me crazy ever since, is that this is not a fifth wave from here to here. This is a corrective type movement. In fact, it counts best as a double zigzag in the Dow. ABC, flat X, ABC. Well, you know, what's the most common first wave in an ending diagonal? It's a double zigzag. So, and then when it comes down here, and then when it came to this low in 3 and did a 786 retrace, man, I was absolutely confident. We're going right up to new highs, but we did another 3-wave rally. And it kind of looked like, and then I'm going, what in the world is going on? So this is the last vestige of the bullishness that I can see right here in the Dow. The fact that we held this low, we have what could be an A, a flat B, and a wedge C. Again here, this could be a 2 actually in an ending diagonal, and you could actually see 2 more probes to nominal new highs in the Dow that it will take months and months before we have the final top.
Okay, so if we get a low here, you do anything with time? You do cycle work. If we do bottom out here, and there is a shot for a new high, and maybe the Dow and NASDAQ, I don't think took out their lows from early in the year.
That is correct.
Okay. Could it be like, you know, I also pay attention to the change of seasons, and here we are, winter's the 21st, the solstice, that maybe we have a rally into the spring. Do you still do cycle work, and is that what it's saying to you?
Yes, I do. Here's one thing. Here's another way of looking at the NASDAQ. If we had a running flat here and we're starting down, there's still a possibility of a gigantic rally back up here if this turns into a flat. In other words, if this was an A and a B, look at where yesterday's low goes. That's a 132 extension of that rally.
Yeah.
And so that would say you could come clear back up in here, and that's when the Dow could make a new high even. But here, let me show you on this page. Yes, I've got 2 things on cycles that I think are relevant.
Yeah, I saw you had a wheat chart back there. You still trade grains because you know, you can't eat gold. And I'm sure you've heard that before. And you know, I think grains are also great technical markets. And
yes,
also,
I agree.
You know, I follow the Chinese, and they've been stockpiling wheat like there's no tomorrow, and now they're coming into the corn market. And we have an El Nino, and if the dollar's going to weaken, there's probably a great case for a bull market or a hell of a bear market rally coming in grains next year.
Okay, I'll give you next year. Short term, I don't think any of them have bottomed yet.
Okay.
I mean, I think wheat, corn, and beans have all got lower lows to make.
One more low.
Yes.
You know, I use 3 drive formations. Remember J.R. Hill?
Yes.
From the 70s? Okay, so he opened my eyes to 3 drives, which tie in with, you
1,
know,
3, and 5 of Elliott. Sure.
Yeah, ending diagonals, RSI divergence, etc.
Yes.
So, okay, one more low in grains.
I think so.
Okay, one more low in gold.
Let me show you gold, but first, here's 2 things on cycles on stocks.
Okay.
Here's the weekly S&P.
Right, we're right on it.
We're right on it. This is not my imagination. I mean, there you can see the acceleration of the double cycle here, kind of. It goes back at least into 09. This was the 09 low. We had a low on either side of it, of the 74-week cycle. So it's not always precise, but sometimes it is. And here we are. That's the only time we seem to get this oversold is when we're making this cycle, one of these cycle lows. And that is, I thought, interesting that that's nominally due this week. In addition, I think I just happened to notice by accident, because it got so doggone many charts at so many different places. But yesterday I noticed, well, let's see, I said, if this is bottoming,
time.
Yes, take your time, Pete.
Maybe it's under charts for interview.
It's under DJIA. That's all I'm looking for.
Oh, okay.
There it is, right there. Too many
All right.
charts. Okay. They're back in the 80s, late 80s, and through the mid 90s. There was only one cycle that mattered in the stock market, and it was about the 9-month cycle, 39 weeks. And that cycle, my opinion on cycles is that they do not change. That whatever causes them is exact, and
they can invert though, can't they?
They can invert absolutely, perfectly.
Okay.
Or they can come and go. And when they go away, when they come back, they're usually right in lockstep with where they used to be.
Okay.
And so, let me just get this page is loading here. Yeah, you want to talk long-term wave counts now? There's a long-term wave count. This is the case for the big one in the Dow. In other words, some people, including my good friend Robert Prechter, call this a fourth wave. When did you ever see a fourth wave that retraced 75% of the preceding advance?
Yeah.
So that was a second wave, in my opinion. Well,
I used to be influenced by him.
Yes. Well, anyway, he's got a quote. He hates he hates when I say this, I should say.
All right.
But he has a quote that I always used to use, and he gave in an interview, and it says, he's talking about Elliott Wave, and he says, much of the time, no useful conclusion can be reached. And my goodness, is that true? But, they can't say that when they're selling a service for Elliott Wave for everything every day, that,
Right.
They've got an opinion of everything all the time and whatever. But anyway, that is true. Much of the time, no useful conclusion can be reached. But some of the time, boy, can you reach a useful conclusion. And so, I always say some of the time.
It's just hard for people to wait.
Yes, it
hard
is.
To wait.
Yes, you try to force things.
Right.
And this is on a weekly.
God, you know what, Peter? You should be a teacher. Because
yes, well, I was a professor
people?
for a while. Yes.
Okay, because you have so many teachable moments in this, 30 minutes we've been together.
Here's the 39-week cycle.
Okay, right
Look
there.
where it is.
Yeah.
I mean, this used to be the only, so you can see it's kind of gone away. But look at the last two lows, or well, we don't know for sure that this is a low yet, but
right.
I think odds are favoring that it could be.
Okay.
And there's a lot of ways that we could see a rally. I mean, this is a really bearish interpretation of the, here's your high if it's a 1-2, 1-2. Well, then we should have kept going down yesterday. We shouldn't have stopped where we stopped. And let
me ask you this before we broke out of this formation. We had a couple of very sharp, you could call them bear market rallies. Are wave ones always that choppy? Because I had a very hard time sitting. I was, had some bearish ETFs near at the high, but after the first break, even when I would sell a rally or buy those cheaper, I had such a difficult time sitting through this wave and trading myself out of it.
I have always said we ought to have a new formation in Elliott, and we ought to call it the Blob 1.
Okay,
because very often that's the purpose. The purpose of the market is to convince you that it's not what it is.
Yeah.
And so often you've seen an initial move start in a nondescript fashion, and that you can hardly even rationalize that was any kind of a first wave. But at the same time, when you're not getting a decent impulse coming off of a formation that you think you should have one, well then you should question that. Now, if you look at the transports, they had a high, and this is also not pretty, but at least it came down in a wedge. It had a little rally, and then it went straight down, and it rallied in a 3, and it collapsed again. But even this kind of looks like a 1, 2, 3, 4, 5. That this might be ready for a bounce.
Okay. So I love that. Yeah. The purpose of the market is to convince you that it's something different.
That's exactly right. It's always trying to shake you out.
Right.
It's you against the market.
Okay. And
So-
all right, so we're still on the Dow here.
Okay, yeah, this is here. This is
You want to, for selfish reasons, you want to give me your look on gold?
absolutely. Let me find my gold stuff here.
Because I was looking for lows into the end of the year, and you know, I caught a little piece of it in the gold
Well,
shares.
there's been a nice 6-month and annual cycle that we've been having lows around the end of the year.
Yeah. Okay.
But you notice that this has taken off ahead of that,
Right.
and I think that's telling us something.
What do you think is telling us that it's
Well,
good?
here's two possibilities. Okay, I mean, I always have two possibilities.
always an alternate.
Yeah, who said you know they like one-handed economists. They always say on the other hand, you know.
Yeah, oh, right.
I always say, give me a one-handed economist that only has one idea instead.
Yeah.
But you know, a friend of mine once developed a mathematical program to count Elliott waves, and it was an expert system. It was based on rules and on how well the market confirmed the rules. It would come up with wave counts, and literally it would come up with thousands of wave counts and rank them according to how they followed the rules. He did not consider it a successful analysis if it didn't have both bullish and bearish wave counts. And so, I mean, there's always, I mean, it's not pretty always, but there's always two ways of looking at things.
Yes.
And at least two ways. And of course, you know that from being a currency cross trader, what works in one direction has got to be the opposite the other direction. Okay, let's look at the big picture here on the monthly chart.
So while Peter's getting his chart, I encourage everyone to follow him on Twitter, and it's at FIBO SR. So it's FIBBO SR for Peter.
Correct.
Okay.
Here's my preferred wave count in gold. This is the long-term picture. We completed after the spike in 80.
Yeah.
We did a corrective movement to here. This is a very bullish. In fact, here's the most bullish pattern in Elliott. An ending diagonal that ends with a failure or a truncated fifth wave.
Okay.
And write it down. I mean, that is the most bullish, and the opposite. If when it makes it the other way,
Bitcoin might be doing that right now. But anyway,
well, we made we did have a little possible ending diagonal. I'll show you Bitcoin futures anyway. I'm a futures guy. I mean, I do all the currencies, but I do them from futures, only the ones that have futures. So I'm backwards to most of you guys that do currencies.
Right.
But anyway, here's your allegedly a super cycle fourth wave. We should have gotten 5 waves up, but we didn't. We got 3. So when you're looking for a 5 and you're in a fifth wave position, you only get a 3, then the first thing that should come to mind is this might be an ending diagonal, believe it or not.
All right.
And so this might be only the first wave of an ending diagonal that is the ultimate demise of the dollar, you know.
Right.
So anyway, we've come down there with an initial zigzag, a wave X, classic, and another possible A, triangle BC. This could be a major bottom right here.
Right.
And here was your 2 years ago low that was due in Feb 17. We've kind of oscillated right across it.
Yeah.
So now that's going up for
we got a higher low there.
Yes. And so here's a 1 ABC flat 2, 1 ABC flat 2. We could be on our way from the existing low. On the other hand,
okay,
I still think even this is bullish in short term, because let's say that we're going to do a double 3 where you have an ABCX, ABC. This would actually be a triple 3. And then here's what we might be trying to do is tack a triangle on the end of this mess. And you know, there's been no impulsive moves really that were clean in anything, in either direction, I should say.
Right.
And that's why I come up with this double 3 idea, which serves me well so many times. And that says what we might be doing is, but we're not yet ready to take off, like you said, that we have to go up and come back down one more time, and then we'll have the lift off. And now that's what I call the alternative count. If you look at the short term of that, here's what it looks like. Here was the A, the B, the C. Now we need a D. We did an initial 3-wave rally. We did 3 waves down. And now I think we're doing another 3-wave rally, of which we've got 1, 2, 3. Go back down to the hourly. Here's here's the ABC. Here's the X. We're working A. We got 1, 2, 3, A triangle BC. This could be 4, but you know, there's no real alternation here.
Mm-hmm.
This is kind of a zig and this is a zig. So what's more likely is that this is A of a triangle 4. This could already be B, or we could go up like 1, 3, 8, 2 times this.
Yeah.
And then do your triangle, then pop it. Then that'll be the A. We're going to need a B and a C. And we might end up with a high when we thought we were going to have a low. But, you know, that high could be as high as ultimately here before we come back on down. Wave D typically would be 618 to 786 of wave B. That's why I'm looking for a rally up to here from this low.
Okay. And you see any possible scenario that, like, if you showed the dollar that we saw been spiked and we could spike, where gold could come back down towards the 1120 low, not the 1050 low, and then put in a bottom? That would mean taking that would retrace back to where you had C, I think was 1120.
1167 was my C here.
Okay, that was
Gold.
C. So I'm talking further back, 1124. You have it marked as the end of 5 or all the way back there.
Wait, back down in here, or wait a minute, this one.
Yeah, there.
Last year's or 2 years ago low.
Yeah, so could we go back and check 1120 before all this happens if the dollar spikes up to 100, 102? That's the only catalyst I could see for
the only way here's how that could work. I guess we could say this ABC was an A and this was a B, and we're still a C that would take that out.
Okay.
But, you know, then this has got to be a 1 and this 2, and then you're going to need a 3, 4, 5 and still this probably.
Okay. All right.
It's unlikely, I think.
Okay. You know, Peter, what really an excellent interview. I really appreciate you being here, and great story. Thank you for, you know, really bearing your journey and what you've been through, you know, because it gives people hope that, you know, just because you fail doesn't mean it's over. That, you know, you know what?
Yes.
Yeah, you know.
And you failed again, and you failed again.
Yeah, you know, right. People that try and sell the secret to trading, you have the secret to being in the markets. The secret is there is no secret. Yes. It's hard work, and it's perseverance, and living through adversity. That's the secret.
That's right.
And you're a living example of someone who's done that. I tip my hat to you. And like it or not, Peter, you're now my trading warrior brother.
Okay.
And I'm going to be following you. And, you know, you don't have any kind of service, do you? Because
no, I do not. I do not. I just don't want to pin myself down to an absolute schedule. Yeah. That's my problem.
So that's a big advantage of us Mavericks, why we got into the business.
Yes.
So that we can have freedom. It's not.
Well, yeah. I mean, I've got individual clients that you know that I work with that.
Right.
Even they know that sometimes I'm not going to answer the phone.
Okay. Thank you for answering my tweet.
All right.
And
that's
with
been
that,
my pleasure. Thank you for having me on, Dale. I appreciate it.
All right, Peter. Merry Christmas and Happy New Year to you, buddy.
Thank you very much.
All right, everyone. That's a wrap up for Turnaround Tuesday. See everyone tomorrow. What a great interview, in my humble, extremely accurate and humble opinion. Hammett says, thank you, Peter. And Martin, you have his handle again is at Fibbo, Fibbo, SR. And we'll see everyone tomorrow. Good hunting, Fed day tomorrow. So I'm sitting on my hands. Hold on a second. And please take my mouse away from me and put it in the wall safe until after the Fed. Oh, okay. My wife has hidden the mouse for me. So good hunting, everyone. Remember, don't just count your pips, count your blessings. And we'll see everyone tomorrow. Adios. Thanks again, Peter.